Imagine if the value of your home went from $250,000 to $4.5 million in 1 month. That is what happened to GameStop. And the reason is really simple. It's all about buying demand. Robinhood investors were buying, hedge fund managers were buying, but both for different reasons. Let's understand a short sell. Pretend I'm a hedge fund manager and I am going to implement this strategy. Now, it's the Wednesday before Thanksgiving. I decide that Nintendo console is the gift of the season. I'm going to sell several out there for $300 a piece, fully betting that there will be a Black Friday sale on Friday where I can buy the consoles for $250 a piece. I sold it to you for $300. I replaced it with a $250 console and I pocket $50. That's short selling. Now imagine somewhere around Thanksgiving, everybody starts talking and they all decide that the Nintendo game console is the next big thing. So they all run out and start buying up the inventory. I wake up on the morning of Black Friday surprised because the price of the replacement consoles are increasing. First it's $275 and it's eating into my profit. Then it's $300 and I'm just at break even. So at this point, I run out and I start buying consoles because now it's a matter of not losing money. I don't want to have to pay more for the console than I actually sold it for. So we have Robinhood investors buying because of a progressive movement. And we have hedge fund managers buying purely to cover their butts. And here we are a month later with a stock that had an 1,800% return. Now, this has been all over the news, but there are a few key points that you haven't probably heard about that I think we should talk about. Number one, there was a lot of backlash because Robinhood actually limited trading, including some angry tweets from politicians. Let's make sure we understand Robinhood's role in this. They are a broker-dealer. They partner with a clearinghouse to serve as the intermediary between the buyer and the seller. Now, the deal is a trade on Robinhood takes T plus 2, transaction plus 2 days. And there is an inherent risk in that time delay. So what happens is the clearinghouses and the SEC require Robinhood to have a certain amount of capital on deposit to serve as collateral for all of their pending clients' trades. The deposit requirements are a variable in a formula of just pure trading volatility and the amount of trading. What happened is their deposit requirements skyrocketed, and Robinhood literally had to pause trading in order to go out and scrounge up money to meet their deposit requirements. The pause in trading was not because they were encouraged to by Wall Street or as a way to keep the little guy from getting in the game. It was purely a corporate move. Secondly, a lot of people aren't talking about the fact that many Robinhood investors do so on margin. Now, the irony of the situation is they are leveraging the primary competitive advantage that hedge funds have. Hedge funds can do well because they can buy on margin. They can borrow somebody else's money to make money. Fun fact, historically, Robinhood would let you invest on margin also. So if I put $2,000 in my Robinhood account, they would give me another $2,000, which then gave me $4,000 to invest with. Now, there was a lot of backlash because Robinhood was forcing trades, and they did adjust their margin requirements over time, but a lot of the initial buys in this revolutionary frenzy were done on margin, which meant the investors were, yes, investing some of their money, but also investing money they borrowed from Robinhood, which really exposed the company to the downside risk of the stock. So within their margin agreements, they said, whoa, 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 we're going to have to sell all this stock that was bought on margin because we can't be exposed anymore. Another point I want to make. This is in some ways this fantastical tale of a progressive movement in David versus Goliath, but I do believe there is a clear case for market manipulation. You have influencers online actively encouraging mobs to buy this stock. In the beginning, yes, with some sound, reasonable business reasons, but towards the end, it was purely meant as a political statement. So I think the SEC has their work cut out for them when it comes to evaluating what happened, determining if there was any nefarious behavior, and how they're going to regulate it in the future. Now, here's my greatest concern. Okay. My greatest concern is that the average investor is going to lose confidence in the system. I'm concerned that we now have an entire generation sucked in by the gamification of trading. And they see it as a short term contest or as a way to make a political statement instead of the long term haul it really should be, the ability for the average American to actually participate in the long term growth of the economy. I also have significant concerns about the overall role of social media in our lives. The investing world and the stock market is just the latest victim in a string of those, US capital included, that have been harmed by this herd mentality that is generated online. These self created tunnel vision, this is my belief, and everybody in this hole is going to continue to reaffirm and socially accept these beliefs tunnel that we're all falling into. But I will say this, aside from the fact that this second half of the digital revolution is fundamentally changing every aspect of our lives, when it comes to investing and GameStop and these revolutionary buys and this mob mentality, the fact of the matter is the GameStop move was so successful, there's no way it will be the last. This type of buying, unless we have major and swift intervention by the SEC, in my opinion, is going to continue. So here's what the average investor and advisors need to know. It further compounds the need to diversify. It further compounds the need to keep your eye on the future and in the long term. And remember this, investors, friends, family, uncles, your fraternity brother, love to talk about their wins. They love to talk about the stocks they bought that they made money on. Nobody talks about the losses. And I can assure you, there are plenty of people losing in this GameStop movement. That's it for this week. This is Jeannie Fisher, the 401k lady.